Good afternoon, everybody. I hope you can hear me, and welcome to this Big Society Capital webinar this afternoon. Thank you very much indeed for taking the time to join us and to talk about the strategy document that we published last week. Just to introduce ourselves here at this end, I'm Stephen Muirs. I'm the Head of Strategy and Market Development here at BSC, and in the room with me I've got three other members of the BSC team: Simon Rowell, James Burrows and Douglas Sloan. Our aim this afternoon is to talk through the document we published last week, Social Investment Today, and to give you an opportunity to ask the clarification questions and to hear a bit more explanation about the material we published there. This document is intended as the background for our strategy review that we're now entering into. We've asked for you to give any detailed feedback in writing by the 20th of December, and we hope that after this webinar you'll take the opportunity to do that. How this is going to work is that we'll go through each of the major questions in that document in turn, with a member of the team briefly introducing the question, and then pausing to give you a chance to ask us anything. You can do that either by typing a question in the text box you'll have on your screen, or raising your hand virtually through, I think, should be a button that you can see on the screen as you join the webinar. We'll then attempt to respond to those as we go along, and then move on to the next question when there's no further input. We are recording the webinar, and we'll be intending to then put this on our website afterwards, so bear that in mind in any contributions you might want to make. So, without further ado, I think we'll make a start. We've got quite a few people who've joined the webinar now. Excuse me while I move us on a page on the document. So the first question that we wanted to put to you today and explain a little bit more is this question around who needs social investment, and Douglas is going to say a word or two about this one.
Yeah, so when we thought about who needs social investment, the critical question that we landed on is there a limit to the amount of repayable investment needed in the regulated social sector? And if so, where do you think it is? And the context of that question comes around our belief that social investment to date has primarily been to regulated social sector organizations or asset-locked social sector organizations, using where our capital has gone as a proxy for that. And when we examine the revenues of these organizations, typically we see that a majority of these organizations do have revenue of less than £100,000 per year, at which point it seems reasonable to question what proportion of these organizations may find repayable finance suitable. And a quick analysis of that suggests that the investable universe may have an upper limit in the region of the low tens of thousands. Of course, the demand for social investment is driven both by the number of organizations and the amount of capital those organizations need. And when we think about the amount they need, it's much harder to understand that, as it varies significantly across sectors, product types, organizational types. And of course, each of these things is changing over time as they all innovate and evolve. With that caveat, we still think this question is an important one, as it leads on to two further questions. One about the right types of organization to be receiving social investment and seeking social investment, and one about the right type of finance to provide to those organizations. And we touch upon one of those a little bit later on, and when it comes to the right type of finance, we've posited that perhaps there might be a greater role for other kinds of finance, blended finance, for instance, alongside straight repayable finance. And we're interested in hearing responses to this further down the line, as Stephen has mentioned. But any thoughts on clarifications or questions around our framing of this critical question would be welcomed.
Thank you. We'll pause there to give you a chance to raise any points you'd like to at this point. No? Is that one crystal clear for everyone? In that case, okay, yeah, we've got a hand raised here from Steve Goldberg. Do you come in? Please go ahead.
Can you hear me?
We can, yes.
Thank you. I wonder if there's a bifurcation in here in the question, that there could be a large number of small organizations that need a small amount of capital, and that would suggest one kind of repayable finance, and then a small number of very large investment opportunities in organizations that are ready for something more that we could call scaling at a population level. Thank you.
Thank you. That's a very helpful comment. I think we'd recognise that picture you paint, that there's clearly a considerable diversity of need, and it's likely that there will be different products, different scales, different types of finance needed for different organisations. And understanding that complexity of that picture is something we're very keen to do, and hoping that people will feed into this process through their responses. But yeah, that's a very helpful point to clarify the kind of thing we're looking at here. Okay, anything else anyone wants to ask on this particular point before we move on to the next one? Okay, in that case, we will move on to the next page, and it's a question about channels. Douglas, again, you're going to briefly say something about this one.
Yeah, so as we thought about who channels social investment, we think the critical question in this space is what kind of intermediation will be needed in the future, and how will we get there? And the way we started thinking about this is looking back over the last few years, we see the number of intermediaries grow considerably, in line with some of the goals of market development pursued by the government and independently by Big Society Capital and others. But we see some questions around sustainability still. And in fact, we see sustainability remaining challenging for dedicated social investment intermediaries, aside from those of significant size or with recurring forms of subsidy. And one of the dynamics that plays into that is the kind of products that are often demanded around particularly affordable growth finance, which can be perceived to carry a higher risk and is often more challenging to deliver cost efficiently. And there's two things that a solid intermediation method would provide ideally, and one is sustainability for the intermediaries themselves across a range of services and products, and also the delivery of the finance that social enterprises and charities need, and that is to say, of the right size, the right duration, and at appropriate levels of affordability. And how this might be possible in the future, whether it's through intermediation, disintermediation, or quite what shape that would be, is something we're interested in hearing about from you guys. But as you said earlier, right now it's about sort of clarifying the thinking behind this question.
Thanks, Douglas. Any points people would like to raise on this issue around intermediation? I'll pause for a second to give you a chance to have a think and raise your hands or type in any questions you might have. Steve, again, do come in.
But I'm happy to let someone else go first if there's anyone else.
You could go ahead. You raised your hand first, so far away.
I don't want to monopolize the conversation. Is there a consideration of the fact that the size and nature of the deals that we have so far, intermediaries can't make enough money from the deals themselves to support a viable business model for themselves? And is that a challenge that's important to BSE and you're thinking in this new examination that you're doing now?
Yes, that is an important challenge, and as came out, I think, in the paper and what Douglas said, this question about sustainability of business models for intermediaries is a very important one. Of course, as BSE is a wholesaler, we do primarily operate by supporting intermediaries, and if the business models that are out there and the deal sizes make that tricky, then that's something that we need to understand as part of this work and develop ways of responding to that. So yes, you're absolutely right. That is an important issue on which we'd be very keen to hear people's views.
And just following up on that, I think in terms of sustainability, there's probably two levels. one is a question on the individual cities or intermediaries and whether they're sustainable in their own operations, and two is on the whole sort of landscape of intermediaries as well, and whether the combination of intermediaries all trying to do the same type of deals is sustainable, and what a sustainable form would look like.
Thank you. Other questions or comments on this issue? We've had a few more people join the conference since we started, so please do feel free to either raise your virtual hands or type in a question. Okay, in that case, we will go on to the next item. The fourth question about where social investments comes from, who provides it, and James, I think you're going to speak to this one.
Thanks, Stephen. This question is about who provides social investment. That is, the investors. Where is the capital that is motivated to create positive change in society coming from? By way of background, these pools have grown over recent years, be they in the buckets of impact-led organisations, individuals, or motivated institutions. And the trends and evidence we have seen is that this is likely to keep growing in a couple of these key areas. But the interesting aspect is the overlap between, on the one hand, the investor's level of mission, nature of their capital, the investment return, needs and objectives, with the types of opportunities that these are looking to support and invest in on the other hand. Now, social investment, as we've discussed on a couple of the previous points, is a broad term and can capture a range of different things. But is there enough of the right type of repayable finance to meet the opportunities that present themselves? And are there enough of the applicable opportunities out there for the capital that is ready to move? As we outlined in the critical question, before we pause on this, what do most investors want to invest in, and how many social investment opportunities would that include?
Thank you, James. We'll pause for opportunity for people to raise their hand or type a comment on this issue. Anyone? Okay, if people are crystal clear on that question and have nothing they particularly want to raise, we will move on, if no one's going to say anything, to the next one, the fifth question, which is around the sources of impact in which organisations will make an impact. And James, again, is going to talk to this one.
Thanks. And this is one that Dougie highlighted earlier as following on from the previous question to some extent. This section is about who else makes an impact. This is about exploring the broad range of organisations and entities who are focused on making a positive impact in society. And I guess the hypothesis being tested is that there are a broader set of organisations who are currently on the edges of the groups receiving social investment, as we've seen it to date, that would also benefit from provision and availability of social investment. Is there the potential to unlock and contribute more to making a positive impact on society and helping improve people's lives by understanding these groups further and the possible role for social investment for them? On the one hand, these could be the wider set of asset-locked organisations, or on the other hand, these could be profit with purpose, mission-led business type organisations who want to make a difference in their own way. Now, and finally, are there other groups, future creators of impact, for example, emerging sets of entrepreneurs who could benefit and contribute should there be greater availability of social investment for them? Now, there are obviously a range of questions here being explored in numerous forums at present. But for us, this may include a key distinguishing factor between a broader approach to championing social investment as a whole versus a potential focus on a subset with BSC's own investment capital. But regardless, exploring and understanding the potential and need of this frontier is extremely important. And as we outline again in the critical question, which vehicles, in addition to the regulated social sector, will make a significant impact in future? And crucially, where could social investment usefully play a key role?
Thank you, James. We'll again pause for you to ask any questions. And I should say that we'll also have a space at the end, when we've been through all the questions in the document, to have laid any broader issues or cross-cutting questions. So don't feel you need to chip in on one of these specific pages. If you have a broader or more general question you'd like to ask, there will be an opportunity for that at the end of the webinar. But at this point, anything anyone would like to raise on this particular aspect? Who else makes an impact? No? Okay, in that case, we'll move on and have extra time for a broader discussion at the end. Simon's going to do the next question, which is around the credibility of social investment.
Thank you, Stephen. So this question is about building the credibility of social investment. And since social investment has been around, a lot of effort has gone into building up the awareness of social investment as a concept. And that might be for a range of possible stakeholders, from investors to charities and social enterprises, to intermediaries themselves and to government. And substantial effort has gone and probably substantial progress has been made since that started. However, going forward, it's right to ask the question of whether there should be substantial focus given on actually further building credibility for social investment as a priority, because it really matters to success. So why could that be? On the one hand, actually building a deep understanding of social investment among interested stakeholders may contribute to the growth and effectiveness of it. It might provide the relevant credibility of institutional investors, for instance. With the public, it might provide an opportunity to unlock a much deeper pool of capital. And overall, this might bolster the robustness and belief in social investment as a concept. But on the other hand, however, focusing purely on building the credibility of social investment as a singular concept may actually have some negative effects as well. It may obscure the range of types of social investment that actually has developed there, and actually understanding that social investment can be a tool to deliver impact in a range of different ways. It also requires a lot of effort and resources to focus on building up this one concept in the kind of public imagination, and maybe that is better spent in other places as well. Ultimately, this comes down to whether you also believe that there is a particular time needed now for us to capitalize on momentum to actually reach a kind of critical point whereby social investment reaches sort of a broader brand awareness across society or across relevant stakeholders. So the question we ask ourselves in this critical question, therefore, is how much does increasing awareness, understanding, and demonstrating visible impact at scale matter to making social investment a success, and to whom?
Thank you, Simon. And again, we'll pause for you to raise any questions on that particular area. We know there are quite a lot of you in the webinar, so please don't feel shy. You're very welcome to raise anything you'd like to that would help you understand what we're getting at here and frame your response to our consultation. Anyone? Okay, in that case, we'll go on to our final one of specific questions before we do a sort of overview. And this is around the beneficiaries of social investment. And Simon, again, is going to talk to this one.
Thank you, Stephen. So this question is around who ultimately should social investment help, or sometimes we refer to as beneficiaries. So arguably, much of what big society capital and others in social investment have prioritized is what we refer to as the most disadvantaged or the most vulnerable population. Broadly, as a very, very crude proxy, people would consider this as sort of the poorest 10% or most disadvantaged 10% of the population. Obviously, this is a population group which is in significant need, and actually where serious interventions are required to support, and where many charities and social enterprises rightly devote a lot of their time to helping, and actually probably represent some of the toughest social challenges out there. However, they do not necessarily have to be the only target of support from social investment and the charity and social enterprises it supports. There are reasons to suggest that purely focusing on this group of population could actually be problematic. We know that actually many organizations focusing pure in this space do struggle to remain financially sustainable. We know that actually, for instance, there is a broader group of beneficiaries out there who actually are really suffering as well. I mean, reflecting on comments from the last autumn statement and IFS and others about certainly the poorest 30% of households will actually see incomes and living standards decrease in the next decade. So there could be other appropriate target groups set that actually would reach a broader group of beneficiaries. So what would this possibly, with this new approach, do? It might mean, for instance, that you can find social problems and solutions that could be more easily scaled and replicated, given the amount of people this would involve. It might be that it enables a greater focus on prevention, given the range of social issues. it might give the opportunity for more sustainable revenue models to support finance and therefore attract co-investors. And potentially, this also has the opportunity to cross-subsidize some of the more vulnerable populations. And finally, it might also give the chance of achieving more systemic change, given that you're focusing on a much broader segment of the population. Therefore, the critical question we ask ourselves in this case is, who should social impact ultimately be delivered for to make social investment worthwhile?
Thank you, Simon. Again, we'll pause at this point. Do please raise any questions or comments you'd like to on this particular critical question. So yeah, we have a hand raised. Please unmute you. And right, please go ahead.
It seems that some of the context that you just described raises larger questions about the role of government, the role of philanthropy, and so on. I guess I'm wondering if you can reverse the way of thinking about it in this particular case. You're focusing on social investment. Your resources are from investors. Is a way of answering this question, can it be rooted in, we have a tool that has certain characteristics. It depends on producing outcomes and financial returns. We need certain kinds of measurable outcomes. We need clear definitions of programs. We need capacity to satisfy investors' due diligence and so on. So instead of thinking about the population at large and all the possible ways to serve them, is to ask, what are the characteristics of social investment and how can we optimize their deployment?
Yeah, absolutely, Steve. I think that is a very important point around actually picking apart what works for social investment. And actually, I think we would argue that it's probably useful to link about what works for that for certain bigger social issues that are out there and certain segments of the population that are facing those as well. I think that would probably feature in exactly how we think about this in the next stage as well, and taking into account this feedback as, is social investment actually a tool in itself that could be used, and in what circumstances could it be appropriate to use that?
And that's absolutely right. And that's the sort of issue where can social investment have the biggest impact, be most effectively deployed, is issue we'd really appreciate feedback on through this process, because we're aware that a lot of people will have very particular insights into that from their own personal frontline experience, which would give a great deal of insight to us for this process. Other questions or comments on this particular question? Okay, if we just move on. So, and we've gone through the specific questions, but we're aware those are quite specific, and some of you may well have more general things you want to land with us. And in particular, what we're really interested to see is, for this final question, are we missing any really important questions or perspectives? Are the things that we haven't covered in those broad previous questions that you think are essential for us to think about when really getting to the bottom of the future of the social investment market and what the opportunities and challenges are? So now's your opportunity to feed in wider thoughts and in particular areas we might have missed, which you think we should be focusing on. So I'll pause here for you all to raise anything in that line that you might want to. Nothing at all? Everyone extremely clear with what we've said? No additional questions we could possibly need to answer? That's good. It's reassuring today. I'm not sure that's right, but it's your chance to feed anything into the debate. Nothing? Okay. Well, look, you have plenty of time to think further about the questions we've discussed today and the evidence pack that we published alongside the document that we've just discussed. And we'll, as I think we said, be taking written input on all these questions, and we're very glad to have such input. We've asked for it by the 20th of December, so a nice Christmas present for us. If you can get your responses in by then, it would be extremely welcome. So I hope that the webinar today has been useful to you in helping you understand what we're getting at with this process and the kinds of issues we're grappling with, and will help you frame some helpful responses for us, which we would certainly very much appreciate as input to this process. And final quick pause. Is there anything else anyone would like to raise? Final chance before we wrap this up.
I think just from me in the room, people may not have detailed answers to all of these points. They are wide-ranging, and people's experience might be narrow of that. That's okay. If you don't have detailed answers on all 8, but you have particularly 1 or 2 that you want to give feedback on, please just send in with 1 or 2 and say that.
Someone's just typed in a question for us on whether this has been recorded, because I think someone who missed the very start. The answer to that is yes. We have recorded the webinar, and technology permitting, we'll be putting it up on our website. I don't promise exactly when, but that is certainly our intention, assuming that the technology allows us to do that and it's functioned properly. So we will be putting a recording of this up there. Anything else anyone would like to mention or raise? Okay, well, in that case, it mainly remains me to say thank you very much indeed for your time and attention this afternoon and contributions. We hope you found that helpful and gave you some insights into what we're doing, and we look forward to your wider and further contributions to our strategy process as we go forward. Thank you very much indeed.